am the writer of These People Are Not Investors. It has taken off on Twitter. I did not quite expect that. There is one error that I would like to correct. ARCC is not trading at a 25% discount. It's only 4%. I apologize if it is an alpha making article. First of all, it's behind a paywall. Second of all, usually I catch any errors like that, especially before something gets seen by hundreds of thousands of people. The responses are varied. I am surprised how many people care about this, but in reality, they've seen pieces of the puzzle, and I guess they haven't heard someone write it out like that. And then there's also copium. And there's copium because this is the most profitable lending that there is. This is the fee generator of the major money center banks, and this is the main source of management fees for the majority of private equity companies. I had an internship at CVC Credit, and CVC is doing this less so than everyone else and is being punished for it. It is that profitable. We have Ares claiming that they can get 10% returns on less risk than IG corporate bonds. Yet they couldn't go to the corporate bond market. They say, oh, it's secured. Okay, what is the liquidation value of a software company in distress? After you have to pay all the contracts and you have to pay, your accounts payable, what is the liquidation value of secured debt on the majority of these companies? Do we all know how they calculate LTV, loan to value? Well, they say we're going to give you $200 million, and the business is worth $500 million. The enterprise value is $500 million. I would like everyone to go discuss with their favorite private credit banker, what are they doing this weekend? Did they have fun? Did they go, to the spa? They're all panicking. They're all working. Go do your homework. If you have such a great network and you understand capital markets better than I do, go figure out what the private credit bankers are doing this weekend. And the question is, how did this all start? I like to see the genesis. How did this all start? And I think it's a capstone. There was obviously private credit before, but when Apollo co-founded Athene, and then they eventually acquired it, that happened in 2009. This type of lending has never had a credit stress, besides one time. And that was 2020 when everyone got bailed out. This would have ended early if we just took the air out of it in 2020. But of course we didn't. This money the permanent capital that they all tout, comes from insurance funds. It comes from insurance funds like Athene. Why does it come from insurance funds like Athene? Because if they give it permanent capital, they don't have to market to market. They can match it to annuities or long-term liabilities, and it's an accounting trick. These insurance funds then use reinsurers in the Bermudas. So you have risk both directions. They have to pay the reinsurer if there's even no calamity, and if they don't get the yield they expected, what happens to their balance sheet? It comes from pension funds. The same intelligent pension funds that were in 2007 willingly going towards the housing bubble. They didn't know any better, but they knew capital markets better than the average person, right? None of this makes any sense. It doesn't make any sense. And I would be willing to have a polite, respectful debate with anyone that says it does. That anyone says, I don't know what I'm talking about. I don't know finance. Okay, let's talk about the ontology of this. I'm not even sure if that's the right word. There's some times where I will admit I don't know what I'm talking about. Let's talk about the genesis of this. Let's talk about ground up the intelligence behind this investing. We can go to Vegas. There's the biggest structured finance conference in Vegas. starting on Monday. Should we go and we'll have a Peter Schiff level debate? I'm down. Who would be willing to get behind their faceless newsletter where they don't put their name on anything and have built up a Twitter over the past 7 years and now have clout because they have some followers? Who would be willing to put their name and face on their opinions on video, because it's easy to lose tweets and sometimes, people find them. But who wants to set the clips for the future? I'm not trying to say that this is all going to go under. This is a massive market. It's not as big as the housing market was. It's a massive market. And there's a lot of money at stake. And it's not just the private credit side. Because what you must understand is that the private equity funds are the main source of this private lending. They're the main recipients. I have people in my comments telling me, no, actually LBOs decrease risk and decrease default. Besides the fact that the research says otherwise, and the logic says otherwise, it's like, yeah, if you lever up more, it's actually less risky. Okay, sorry, I don't understand finance. I don't understand debt capital markets. Must be, outside of my purview of understandings. These private equity companies, they're rolling up dental practices, HVAC. There is zero organic growth. They raise prices and acquire companies. And then actually, the majority of, they're raising prices, so technically that's organic growth. The majority of what they buy is actually going away. So they get a little bit, and on balance, all of their growth has been from inorganic growth, from acquisitions. And these multiples, again, the LTVs on the private credit side are from good times multiples on sponsor marked EBITDAs, where they tend to add everything back that they want. This is a hot potato. You think that these completely disruptible businesses that are roll-ups on no moats, that have just had capital injected to them, you think that they're worth what these private equity companies are saying they're worth. And who owns the leverage? Who owns the leverage? They have now decided to get retail investors, 401ks, mom and pops. They've decided to get their money because they ran out of pension funds to finagle, because they ran out of insurance companies to finagle based on accounting rules. This is all a joke. I am happy to discuss this with anyone. I have part 2 coming out. I'm just going to finish it out and make sure I proofread, because I don't even know how to edit on Twitter articles. I can do it on Substack. I don't know how to edit on Twitter articles. I am happy to discuss this with anyone, and I hope that you all realize exactly the incentives at play, because people are getting fabulously wealthy off of this, and they are not going to take the L.